today on the technicals we have Aditya Agarwala joining in with us, while from the research team today we have Vemakshi as well as Lisa joining in with us. A very good afternoon to all three of you all. And as always, I'm going to be starting with the first stock that is in focus. Voltas is the stock that we're going to talk about. Now, they met with a few analysts. There was a virtual analyst meet which happened, and in terms of the highlights that they've given him, where the management has actually highlighted that the multiple steps they've taken multiple steps mainly for the summer season to tap the higher demand that they will be seeing coming in for the summer season in the RAC segment and to retain their market leadership position as well. Now, given the heightened competitive intensity and the pricing pressure witnessed in the UCP segment, Voltas expects the margins to remain in the high single-digit range for the segment. Now, even the business outlook for the near-term perspective in the electric manufacturing segment as well stands. They are keeping a cautious stance over there, given the recent adverse events which have led to the EMP business slipping into losses on a 9th-month basis as well. So keep an eye out on Voltas. Commentary doesn't seem to be that bad, especially given that demand for RACs, that's the ACs, will be seeing an increase coming in, and they're all prepared to tap into the market as well.
All right, moving on, you have Titagarh Wagons as well as RK Forging. Both of these counters are in focus based on one single news flow. This morning, both of the counters informed the exchanges that their consortium have won an order, and on back of that, you have Titagarh that is seeing an uptick of about 1.9%. RK Forging is seeing an uptick of about 8%. At one point in time, Titagarh Wagon was up about 4%. A consortium of Titagarh Wagon and RK Forging has emerged as the lowest bidder for manufacturing and supply of forged wheels or for Ministry of Railways. The project has come under the Indian government's Atmanirbhar initiative. They've said that the total quantity of will be supplied. The total quantity that will be supplied will be around about 15.4 lakh wheels over a period of 20 years is what the managements have actually indicated. Remember that RK Forging stock is the most active today since the last 4 months. Let me take you some of the highlights that we had when we spoke to the management of RK Forgings earlier in the day to talk more about the order, and what the management indicated that it will take about 18 to 24 months to start the production of the new railway order. They're saying that revenue will start accruing by 2026. They're looking at higher profitability from the order from current portfolio ratio, and they will also have spare capacity to cater to the export market as well. And on back of this particular order, they will be setting up a plant with capacity of 2 lakh per annum. So on back of this positive development, you have RK Forging soaring in trade, Titagarh also holding on to good gains.
Okay, let's go across and actually listen in to what the management also had to say, more on that, and listen in to what they had to say.
A new capacity for this project will be set up, and it will take around 18 to 24 months to start the production. But the optic will be quite huge, because we are not looking only at the railway, we are looking at other markets also, and even after this Ukraine issue where the largest forging wheel facility has been destroyed, we are looking at it globally, and we will set up a huge facility to cater to the entire market.
Okay, let's go across to Aditya with your first stock for today, that is Power Grid. When you look at it in terms of returns, not anything exciting that has come in the last 6 months for Power Grid. So finally, can an investor actually expect a good up move?
Hi Vinny, good afternoon. Absolutely. If you look at the entire utilities pack, that is the only one space which has actually bucked the market trend, be it oil and gas, energy, or power sector. And Power Grid definitely is one of the stocks within that sector which tops the list. It has managed to break out from a downward sloping trend line at 230, and at current levels definitely makes the list for a buyer's list. On the upside, can test levels of 238 to 250 as well. Technical indicators do suggest that the up move which has started in the stock today will continue in the coming trading sessions as well.
All right, Vemakshi, coming to you then. KPIT Tech, this one was also in news today. Why is that?
Well, absolutely, Cheryl. This stock is in focus on the back of a news flow that came in. Now, KPIT Technologies has announced a partnership with Honda, and this is in order to realize the journey of Honda software-defined mobility. That is the SDM. Now, we also have something that the CEO said, Mr. Kishore Patil. He said that KPIT's vision is to reimagine mobility in order to create a cleaner, smarter, and safer world. KPIT has worked closely with Honda for the past 8 years, and they believe that the partnership with Honda in the medium to long term will expand to over 2,000 software and vehicle system professionals from KPIT across the globe in order to power Honda's SDM roadmap, and that will happen until the year 2030. So on the back of that, we actually have KPIT Technologies in focus. The stock is holding strongly in the green, to trading with gains of around 7% as we speak.
Let's move on to another stock that is in focus and is trading in the green, and that is PNC Infra. Lisa, what's the news flow here today?
Yes, PNC Infra is in focus, and the reason being that it has won a highway construction order worth rupees 1,260 crore. Well, according to Sherkhan, this order win was critical on the back of the reason being that it won nil order inflows in the last 9 months FY23, and that was because of aggressive competitive bidding as well as weak awarding during this phase. However, in Jan, the things turned around, and the road construction awards, it grew 2.2 times on month-on-month basis. And the brokerage firm also expects strong order inflows in the March quarter. Well, PNC's order book is quite healthy as on December 22, and it stood at around 17,000 odd crore, which is 2.6 times the standalone revenue. And with the receipt of the new orders in the near term, that will aid the revenue growth going forward for FY24 as well as 25. The stock is up like around 1.8%. However, it touched a high of around 297 in early morning trade, and the trading volume was 95% above its 20-day average. So, well, on the back of this news flow, PNC Infra is in focus today.
Right, that's PNC Infra for you. But moving on, Aditya, Petronet LNG, how are the charts looking for this one?
A very strong one, Cheryl, and again, one of those stocks which is almost on a regular basis made higher highs, higher lows. It's broken out from a rounding bottom pattern, and the best thing is it's trading above its 200 weekly moving average, and it has done so after months of trading beneath its 200-day moving average on the weekly basis. On the upside, can test levels of 245, 250 easily. On the downside, 210, 215 is a good strong support area for the stock, and volumes have been quite encouraging in the up move that we have seen recently. So all in all, it's a thumbs up, and one should definitely look at Petronet LNG for at least targets of 245 to about 250 in the near term.
Okay, keep an eye out on those levels for Petronet. But let's move on and talk about NBCC. The company is in focus on the back of an order win. They've received a work order from the government of Pondicherry to construct. Overall, when you look at it, it's around a 200 crore construction of the government medical college and hospital in Pondicherry for around 500 crores. I beg your pardon. So keep an eye out on NBCC. Today, the stock is up with gains of 2%.
Right, moving on, Aditya, MCX, how are the charts looking for this one? Do you think now it has reached an attractive level that one can look to invest in?
Oh yes, I believe so, and it's almost on the verge of a breakout from a bullish flag pattern as well. To everyone's surprise, MCX has actually outperformed in the last couple of weeks, and it's now also approaching the upper end of the range, which is 1535. Once it manages to trade above 1535, I'll go aggressive long on the stock. Look for a target of at least 1700 on the upside, more of a positional trade. RSI too suggests that the up move which has started in MCX is likely to continue for a couple of more weeks. So all in all, looks very strong on the charts.
All right, moving on, let's talk about Nazara Tech. This particular counter was in focus in yesterday's trading as well. But today, if you look at Nazara Tech, the stock is actually seeing an uptick. It has seen, at one point in time, it was up approximately 3%, marking the sharpest intraday percentage gain since February 28. No doubt the stock has actually given up the gains like the rest of the markets. The company informed the exchanges that its units, Kidopedia as well as MediaWorks, have been given unrestricted access to the entire amount of $7.75 million that were held in Silicon Valley Bank. And from this amount, $7.25 million has already been transferred to bank accounts outside of SVB, and the balance amount of about $0.5 million remains in Silicon Valley Bank accounts for unrestricted operational use. So on back of this particular clarification coming in, the fact that the units have access to the funds that are deposited in SPB, the stock is seeing an uptick today, 0.5% uptick right now it's holding on to.
Okay, that's Nazara Tech for you all. But let's talk about IOC on the charts. Aditya, how is this one looking like? Is it the right time to buy this one, and what are the levels that you're keeping an eye out on?
Definitely the right time to buy IOC. In fact, one of the strongest within the OMC SPAC. Almost on the verge of a breakout from a trendline support, which is at 80. Once it starts to trade above 80, I'm looking at a target of 85 to 90. So let it cross 80, and then you can aggressively go long on the stock. Recent consolidation has also proved that stock has more legs on the upside. The volumes were thin, and now we are looking at build-up of the volumes as well. On the downside, 75 is a strong support area. So risk to reward is also in favor of going long in the stock. Technical indicators do suggest that the up move shall resume in the coming trading sessions. So look for a target of 85 to 90, and beyond 80, go aggressive long.
All right, that is the take coming in on IOC. But Vemakshi, Paras Defense is a counter that is in focus in today's trading session.
Absolutely. If you look at the market, it's been rather flat, but Paras Defense, this stock is holding strongly in the green. In fact, as you can see, it's nearly 3.5% higher today, and that is after the company has entered into a memorandum of understanding, that is an MOU on March 14, that is yesterday. And this memorandum of understanding has been signed with Controp Precision Technologies Limited, which is based out of Israel. Now, this MOU has been signed with an intent to create new opportunities and as well as expand both parties' business in the Indian and global defense sector. Now, this will, in order to support the MOU objectives, the parties intend to form a joint venture company in India, and that will be for manufacturing electro-optic systems for various applications. And this is all in accordance with Government of India's Make in India initiative. So that is the reason why Paras Defense is in focus, trading nearly 3.5% higher as we speak.
Okay, that's Paras Defense for y'all. Keep an eye out on that one. Buzzing in trade. But Aditya, you picked out BPCL as well. Similar charts to IOCL then?
Similar looking, but has more legs on the upside because it has underperformed within the OMC pack. I believe 350, 360 easily is doable on the stock in the coming times. Let it cross the immediate hurdle of 335. Beyond that, easily you can see levels of 350, 360. On the larger time frame charts, in fact, stock has taken support at a lower end of the triangle pattern, which clearly suggests the risk to reward is in favor of going long. So the entire OMC pack is looking good. IOC BPCL definitely tops the list.
All right, so that's the take coming in on BPCL. First, we had a take on IOC, now BPCL. But on that note, we slip into a break on this edition of Market Fatafat. Stay tuned, more on the other side. Don't go anywhere.
Welcome back, and you're watching Market Fatafat on ET. Now, let's keep it going with all the stocks that are buzzing in trade, and moving on to our next one. We have RailTel, which is in focus as well on the back of an order, Lisa, right?
Yes, absolutely. RailTel, it's in focus. It rallied around 5% in early morning trade, and as we speak, it's up around 2%. And what's aiding the rally is that it won an order of around 288 crore, and this is related to an IT infra order. So the work order pertains to supporting installation of IT infrastructure in greenfield data centers in New Delhi as well as Bangalore. RailTel also said that the order will be executed within 300 days of the date of the from the work order being placed. And just last month, the company had received another similar work order from Bangalore Metro Rail Corporation. And ICICI Security, in its note, mentioned that increased competition for the project business was hampered owing to aggressive competition. So RailTel has shifted its strategy towards gaining more of volume-based projects rather than margin-based contracts. And this will help boost earnings for the company going forward. So, RailTel is in focus on the back of this news flow.
Right. Moving on, Aditya, let's talk about BHEL, a cap goods major company in focus with the rest of the cap goods space. Did see a good uptick as well. Do you think now it's time that the stock will consolidate and you should just pause with your investments in this one?
Why pause, Cheryl? In fact, I believe there's more upside in the stock. Has been a surprise up move in BHEL, though the entire cap goods space has been buzzing around. But yes, a good up move in BHEL in the past 3 trading weeks that we have seen. And I believe stock is poised to test levels of 85.90 as well on the upside. Has broken out as we speak from a downward sloping trend line, so adds more value to it. Volumes have been pretty good along with this on the up move. RSI too has formed a positive reversal on charts. So clearly looks like there's more upside in the stock. With 72, 73 on the downside as a good strong support, one should definitely look at adding on to it for targets of 85.90 on the upside.
Okay, let's move on and talk about the next one, and that is IEX. This one is in focus, buzzing in trade. Why? Because Axis Capital has upgraded the stock to a buy from a previous reduced rating. They've also upped the target price for the company, 175 rupees per share as a target price versus 142 rupees. They believe that the company is actually set in terms of the liquidity is set to improve for the company. An unprecedented phase of tightness was seen this fiscal as supply constraints have eased now, and policy interventions are likely to usher in terms of the tailwinds. The base will turn favorable starting from April is the highlight coming in from Axis Capital for IEX. Now, overall, what they believe is the fall in LNG prices improves the outlook as well for IGX, as well as they see an IEX potential doubling in 4 years led by the volume growth. So keep an eye out on that one. New target price of 175 rupees and a rating of buy coming in from Axis Capital for IEX.
All right, that's IEX for you. Looks like the tide is definitely turning in favor of this particular counter. But Aditya, Aurobindo Pharma, how is this one looking to you? Do you think the tide is turning in favor of Aurobindo Pharma in the pharma pack?
Yes, Cheryl, I do believe. In fact, this is something which a lot of people have been ignoring because of the clear fact that stock witnessed massive correction. Now it's been looking like breaking out from a downward sloping trend line, and beyond 473 on good volumes, if it breaks out, chances are high stock can test levels of 495, 500 as well. So it's a good up move that I'm seeing in Aurobindo Pharma, and clearly hasn't corrected significantly in the last 1-2 weeks. If you take a look at the way the stock has performed, along with that, volumes have been pretty good in the up move in Aurobindo Pharma. The days that the stock has posted gains, so volume it's backed by good volumes. So at current levels, one can look at adding on to the position. Look for a target of 495, 500 on the upside, with a good support at 460 on the downside.
All right, moving on then let's talk about the entire retail space. And why is that? Because Morgan Stanley has initiated coverage on some of them and also given a rating change as well. So let me take you through one by one. First up, let's talk about Vedant Fashion. They've initiated coverage on Vedant Fashion with an overweight stance. They've set a target of around 1,354 rupees per share, which implied about 19% uptick from the last price as yesterday's closing price. They also initiated coverage on Page Industries with a recommendation of an overweight stance, target of 44,500 rupees per share, which is a substantial uptick from where the stock is trading currently at around 37,000 odd crore rupees. Next, let me talk about Aditya Birla Fashion. They've initiated the coverage on this particular counter, but with a recommendation of underweight stance. They've set a target of around 195 rupees per share, which is a significant downtick from the current market price for the counter, and also initiated coverage on Trent with a rating of equal weight, and they've set a target of around 1,244 rupees per share, which also implies a downtick from the current price. So that's the retail space that is in focus on back of Morgan Stanley's initiation.
Okay, keeping an eye out on all those retail names. But let's talk about a paint company and Asian Paints, Aditya. How is this one looking like on the charts? For almost the last 1 year, we've seen that the stock has not done anything, quite an underperformer there as well. Finally, is it time to buy this one? Will we start seeing an upside, and will we see a green coat coming in for Asian Paints?
Oh, absolutely, Vinny. I believe green coat is coming in Asian Paints through and through, at least for next few trading sessions. Stock, as you mentioned, hasn't done much for itself in past 1.5 years. Has been a massive underperformer. I believe now it's time for outperformance in the entire paints pack, and Asian Paint definitely stands out. A sustained trade above 2880, 2890 will take the stock higher to levels of 3000 and beyond. So at current levels, definitely it's forming a base. One should add on to Asian Paints on declines and above 2900 for targets of 3000, 3050 on the upside. And a positive divergence on RSI clearly suggests the downtrend in the stock is now getting over and the uptrend will resume soon.
All right, so that's the take coming in on Asian Paints. Let me quickly mark the flash on the bottom of your screen with regards to what China is doing with regards to their steel output. They are saying that they will be looking to cut the steel output, annual crude steel production in 2023. This is what is a source-based information that we are picking up from wire agencies, and this will be the third year in a row that the government has mandated to reduce the output in order to rein in carbon emission from heavily polluting sector. Remember that China is world's biggest producer and the consumer of steel, which is indeed the backbone of the industrial economy. The output is something that they've been cutting from the year 2000, from the last 3 years. So definitely watch out for all of the steel counters: JSW Steel, Jindal Steel and Power, as well as Tata Steel.
Absolutely. On that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more updates after the break.